Hello traders, and welcome to NOFT's Weekly Market Compass, where we help you navigate the week ahead. Our Weekly Market Compass is brought to you by our head trader Troy, who in between assisting traders and taking the next step in their careers, provides weekly and daily guidance in our live trading room every single day. Before we get into this week's guidance, we need to remind you that trading does carry significant risk, and all information in this video is just provided for educational purposes only and is not an offer or recommendation to trade future stocks, options, or Forex. From everyone here at NOFT, good hunting out there and happy trading. Here's Troy.
First of all, I'm looking at forexfactory.com. It has a nice calendar. We're going to go ahead and look at it. January 22nd is today, Monday, and you'll see that right up here there is virtually no U.S. and very, very little news out today. Absolutely no news. Sometimes no news is good news. In this case, not the case. The dollar's gotten hammered really hard over the last couple of days as the U.S. government has shut down and is now, I guess it shut down Friday night and continues to be shut down as the Republicans and Democrats act like two little kids fighting because he did it first. No, he did it. No, he did it. Yeah, it's as stupid as can be. I hope that obviously there was a big shift in people's opinions to get Trump elected to begin with, and while I don't particularly care for some of the things that he has done, I think that the real thing we should take is that people are tired of the crap, and this is just more of it. I really hope that voters turn out in this fall at the midterm elections, and vote anyone who's been in office for more than 5 minutes out, and put some new blood in there. Oh my goodness. Anyway, so this complete lack of intelligence on both sides of the aisle is creating this government shutdown. This is creating tremendous pressure on the U.S. dollar. Okay, so we will be watching today. Anytime there is a news blurb that the government is going to reopen, there's going to be a little surge in the dollar. And so all of the currencies I'll be looking at all of the currencies to the downside, because eventually we will get a budget agreement and the government will start spending our money again. Thank God for that. I was actually discussing the last shutdown. I don't remember exactly when that was, but initially a lot of people were upset about it, but really the majority of the U.S. just didn't care. And I think they're going to get some more of that. Big deal. The government shuts down. Whoop-de-doo. Does that do anything? Oh, they stop hemorrhaging, spending money we don't have for a few days. Yay. I guess there's a lot of cynicism and sarcasm and all that in my assessment here, but I don't think really in the end anybody really cares. Guys are such idiots. That being said, we will see news bumps all day long, so we need to be careful. Make sure that we keep our stops relatively tight, because the least little thing is going to cause the dollar to pop and the other currencies to retrace somewhat. Also, Japan has some major stuff coming out. Monetary policy statement, Bank of Japan outlook report, Bank of Japan policy rate, and amazingly enough, there is no time frame tied to these, which is hard to believe. They wouldn't it's just random. So today is going to be a dangerous day to be trading the yen, because those could come out at any particular time and could be very market moving, at least for the yen. On Tuesday, again, really, there's one red event that happens at 1:30 a.m. Bank of Japan press conference. Other than that, there's no other red items and very little information coming out on Tuesday. We do have the European consumer confidence is something I will look at. Also, the Richmond Manufacturing Index. I want to see if the as we move further south. Remember, we had the Empire State and we had the Philadelphia manufacturing indexes came out the last week. To see if the reduction in those indexes continues down south through the Richmond manufacturing index. Very interesting to me. Wednesday, we finally get a little bit of action in the U.S. markets. We have the flash manufacturing PMI, flash services, existing home sales, as well as crude oil inventories. Those will be big numbers on Wednesday. So at least on Wednesday, we do have some items that may move the market and get some volatility back in. On Thursday, we also have some good stuff. ECB has a press conference. Also, we have for Canada core retail sales, as well as unemployment claims for the U.S. All of that will be good on Thursday. So Wednesday and Thursday are looking very positive from a news perspective. Jumping up to Friday, we definitely have some good stuff. Core durable goods, advanced GDP, as well as some Canadian numbers. So Wednesday, Thursday, Friday definitely look like there'll be some interesting volatility coming into the market, and that is a good thing. Unfortunately, today and tomorrow, not so much, with the exception of the Japanese releasing their information, which will definitely increase volatility in the 6J or the yen. So that's what's going on from a bigger perspective for the outlook for the week. Let's look at some charts very quickly here, and then I'll pass the baton. Maximize this. Look at crude oil. Also, there was a article again. I'm an avid reader, especially on the weekends. That they are talking about somebody came out and said $100 oil again, and I just want to go, are you kidding me? All I can say is that if that actually could occur, that would be a gigantic boom to the shale guys and the oil exports for the U.S. They are just going to go absolutely crazy, and this will be great for the U.S. economy from an oil perspective. Does that hurt us as consumers? Absolutely. It's like getting a tax increase. It takes money out of everybody's pocket. I really don't see how they're going to get rid of this giant supply glut that has been and will continue to be in order to raise prices that much. So I should have tagged the that link just so you guys could read that link. But anyhow, I don't see oil. I think oil's got a very temporary swing to the upside here. Lots of air, as we've talked about before. Certainly does look like a head and shoulders pattern. It's broken the neckline here. We'll see if it can get some momentum to the downside. The pattern is definitely a bearish pattern, at least in my opinion. Again, we don't trade oil very often, at least I don't. That being said, I do like to use it as a fear and greed monitor. So for you guys who are hardcore oil traders, this is a pretty bearish pattern, seeing a head and shoulders up here at the top, especially since it's missing. We really don't have any good support until you get back down here into the 59 area. Maybe just a little support around 62 here, but very minimal at best. So I would be leaning to the short side on oil. Gold, again, not something I'm going to trade. Again, fear and greed continues to maintain this level of fear. It's the only way you can say this. This is everything from the U.S. government shutting down to North Korea to what's going on in Saudi Arabia and Syria, et cetera, et cetera. Over the weekend, I saw a bunch of saber rattling about China being pissed off about U.S. warship getting in their territorial waters, or at least their disputed territorial waters. Blah, 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 blah. But yes, that is fear that can come into the market. That being said, this certainly does not look like a head and shoulders pattern, at least not in the same way that oil did. That being said, this could be a shoulder here, this could be the head, and we may end up, if we can come down here and base, we might be able to get a shoulder over here on the right hand side. Right now, that's pretty speculative. I would say that that's certainly not the case yet. Bonds continue to go down. I need to put some more levels in here, but this is absolutely expected. Federal Reserve's raising rates. Bond prices should go down. That is exactly what's happening. And so this is perfectly normal for the interest rate environment that the Fed has set up. And this is not surprising to see downside to sideways action on the ZN, which is the 10-year note. And the ZB looks very similar to the ZB, of course, being the 30-year bond.